All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and it is Monday, April 20th. Happy April 20th day. So let's talk about the markets. All the focus on the oil today. If you turned on any financial media, probably what you heard today. If you didn't turn on financial media, good for you. Just, just kidding. It is what it is. There was a big move today, and everybody trying to explain what's going on when you have moves like this, and it was, I think it was something that probably hasn't been seen in a really long time, if ever, where we've seen a front month contract, which, by the way, crude is now on to June futures. But regardless, it's you could take from this and kind of learn, basically pick up on what the market is telling you, right? Crude is down 14%. And obviously, the May contract, which was in focus today, which this, again, what you're looking at is the June contract. Because what happens is the June contract, the month flips once you get into that expiry week. So it's the last day, I believe, to trade May. And what happened is the thing capitulated. So that should tell you a couple different things. While they're trying to explain, like, oh, it could be a fund blowing up, and it could be this or it could be that. It's basic law of supply and demand as well. It could be a couple of those things happening, but it could just be that you're dealing with a market that has been troubled for years, right? And now we're in a situation where the country is closed. There's no People are not flying, people are not going on cruises, people are at home, they're not driving as much. So in a market that already had issues for years, now you add this major problem to this market. And yes, you've got crude basically moving down very decently, right? Because people have been moving to alternative energies. They've been doing other things now for years. And even though financial media loves to focus on oil, sometimes they spend, a half an hour. Sorry, not a half an hour, I'm being dramatic. But sometimes they spend 15 minutes talking about oil and energy stocks. And they mention it. There's one financial media company, I don't want to mention any names, but they have a show after hours and they spend 10 or 15 minutes on oil and energy names. There is a problem here, right? There is a problem that people are not using as much oil. And as for those mentioned, or for those reasons that I just mentioned about transportation, people just cannot go on cruises right now. They can't fly on planes. And this is a pretty decent signal that output is down right now. So then the next question is, and first of all, like, people were talking about USO and so forth. USO, I will give you my quick 30 seconds on this. USO is a horrible product. It always has been. Retail investors, before you buy a name, buy an ETF, go to the website and look at to see what it's holding. Just because USO says United States Oil Fund, understand what it is that you're buying, because you're not buying crude. You're buying contracts that have to roll every month. Now, by the way, they did not hold any, as I tweeted out this morning before anybody else was kind of talking about it. They don't own any of the May contracts. They've already rolled to June. But this does not get away from the situation that over time, this is an incredibly poor product, right? And if you're buying this just because it's down, or it says United States Oil Fund, you're not really understanding that just because it says oil on it, and it's just because it's going down, does not mean it's a bargain. Okay, so all it takes for any of these ETFs, it's the same thing with VXX. Retail traders are drawn to VXX. Why? I have no idea. Because it's sexy and it says volatility on it. That's the only reason why I would think a retail trader would be trading VXX, because it does not closely resemble the VIX. So all it takes is, and same thing with the leveraged ETFs. Go onto the website. It takes literally between, I would say, a minute and a half to 10 minutes to figure out what these products are, And I'll give you the quick example with leverage ETFs. They are meant to be a day trading product only. Even in the prospectus will tell you, do not hold these things. They're not meant to achieve returns for more than one day. But retail traders are drawn to them. Look at the volume in this USO. Mainly, and I think there was somebody who was on, I think it might have been Kyle Bass, and he did a pretty good job. What hedge funds are doing for these they're using these projects for is to basically short, because they know what they'll do is they'll basically short this and go long something like crude, and they'll earn the arb between it. That's it, for the main part, right? And they're not really using this to go long crude, because the product is terribly inefficient. So just think about that when you're doing that, because I see it all the time. And you could see the volume in this thing today. People are, retail traders are buying this because it's down. It doesn't make any sense. You don't just buy something because it's down, in my opinion. In any event, right? So we'll go through. Now, the main question is, does this spill over to equities? Well, we did see a move down in crude. Typically there's not a huge correlation between crude and equities, but you could kind of say this is what happened in the beginning of the year. It does have just like I mentioned, people are not going on cruises, people are not going on planes anymore. They're not spending, right? They're not going to the airport and spending. So it does have uh, ripple effects, I think. Also, it doesn't mean, somebody asked me a question in the trading room today, that if there's margin, if somebody gets a margin call in crude, does it mean that they sell equities? Well, most big equity funds, they're not trading both crude futures and trading equities. They normally don't traffic in both, right? If you kind of stick to equities, if you're an equities manager, you don't really trade that much crude. However, there are some quant funds that probably use some type of models, and I'm just speaking hypothetically, but that could say, hey, crude is going down. Maybe our model says that equities might go down a little bit with that too. So that's my take on that. Let's talk about the equities, right? Because again, that really got overshadowed for the day, and I'm not really trading crude. I've said for a while, if you've been a member of mine for a while, even with the OPEC agreement, I said I've wanted nothing to do with energy companies. They had a difficult time when everything was going up. So why think that they're going to bounce back in this situation? I think they're going to be in pain for a while. So it's just not something that I want to traffic in. There's plenty of other things than to try to figure out the energy in the crude market. Millions of other things to trade, right? So here's the main situation for me today. Let's just take a quick step back, right? We've been in this nice big move up here, and it's been a tremendous move over the last month. But you have to, in my opinion, what I do is I make adjustments as things change, right? So if we start to lose some levels, and keep in mind, we don't have a level of support on the daily until basically all the way down here. Now this is a good distance below. So what I do then is look at the 1 hour. Look at the 1 hour chart, and that's kind of giving me a little bit of a signal here as we're moving into the value area for the week, right? So last week we did this a little bit too in the beginning of the week too, but we straightened out and spent the rest of the week above value. If we do fall into value, which we have, is it the end of the world? No, but we're kind of losing some of the upside momentum. So, make some adjustments as you go along. What are the adjustments that I make? When I saw this, and keep in mind, this is the other thing that I'm watching right now. So again, try to keep it simple, right? Forget about like how complicated the oil market is right now. The VIX has moved back up to almost a 44 today. That should tell you something. If you don't know, and if you're new to the VIX, what it measures is short-term volatility in the S&P index. If it's moving higher, which it is, as I'm waiting for Thinkorswim to bring this chart up, right? We've had a nice move down from the highs of 85, but we've bounced back to 43 here. So that's still a very high level. Uh, you know, the average VIX over time is about 20. We did spend a good couple years basically under 20, or bouncing around between 12 and 17, for our last couple of years. So that was a pretty low volatile environment. I would say 20 is the average. We're at a 44, so we're still pricing in over twice as much as normal volatility. So this should continue to dribble down, right? If we've got more of a recovery, like a V-shaped recovery, we should be seeing the VIX start to dribble down, and we have, right? We've seen it move the right direction, and it got below on Friday. It got to a 38. It should continue. It should continue to bleed out, right? And it's still in backwardation, meaning the front month is bid up, and that should also switch to contango. So that's not there yet, and this tells me that we're bouncing back up a little bit is to be a little bit more defensive. Because I think that we should really be moving under 40. It's been now a month since we hit 80, and this should start to move down. But keep in mind, the country is still on lockdown, and now we're starting to see some improvement in the numbers. But how much has the market priced in that there's an improvement in the numbers? Remember, the market is always forward-looking, right? The market, even if we get good news, that doesn't mean that the market goes up, right? Because the market does price these things in. So those are the things that I'm watching. And when I talk about make adjustments, what does that mean, right? Because I'm not going to just leave you there. I want to give you a conclusion, and then I want to look at a couple other sector ETFs. But what it means for me is I will continue to what's the right analogy I want to use here? I will continue to dance while the music is playing, right? While we have momentum in the market, I will continue to trade, actively, and I'll pursue the long side where there's momentum in the market, where I'm seeing, momentum in various different sectors. But if the VIX starts to move up, indicating more volatility, and the S&P starts to lose this momentum, then I will begin to take off some trades. So what did I do today? I started some trades that looked pretty good, as we talked about in the weekend member video. I put out a whole watch list, and I said some names look okay now. Some will look even better if we pull back a little bit. But I got into some BABA, and I took a target in BABA, even though my ultimate target is 219. So I left this trade on. I put on a little bit of MRVL, thinking that this would get, pumped on CNBC, which it did. Took a target on that pump, and then I took the rest off. I also got into a TDD starter, but I didn't like what I was seeing on the tape, and I took it off. I said I don't like how the market is looking. And then one of the adjustments that I make is I take off a lot of short-term exposure. So I trade both options in stock. I had on a Google call spread that expired this week. I took a target on that on Friday, but I don't want exposure for the rest of the week because it's still marking at a good chunk of money. So I'm more worried about the downside and losing basically what I paid for it. And it's basically a scratch considering that I took a higher target on Friday. So that's what I immediately do when I see the market. And again, I don't know if we've got like a full turn in the market. I'm just saying I don't like what some of the things that I see currently on the market. So I get rid of my short-term exposure. Anything that I could lose money because I don't have that much time on it, I take those trades off. Anything where I've got a little bit more time and I've established a stop price and it hasn't violated the stop price, that's fine, to keep on. But if it does hit the stop price, I am going to have a little bit of a loss on my hands, right? But it won't be a big loss, right? So that's how that's how I play this, and make adjustments as I go along. Net was a nice trade too today, hit $27. So again, it's for me, right? I could talk about as other traders do on Twitter and talk about victory laps and so forth. I'm all about, making sure, what I'm looking forward. I'm not here to tell you all the trades that we hit. I'm looking forward to make sure that I've got the right exposure to the market. And right now, if we're moving a little bit, and I think this IWM also is pretty tricky right now too. It was leading at one point today. It went from red to green, and then it kind of fell apart and was down 1% for the day. And you could see the performance for the day. You could see bonds were strong throughout the day. They finished up 80 basis points. Gold as well, and you can see right here is the VIX, right? So I'm not sure whether to put that in green or red, so I kind of just put it in Great. Another move that wasn't really talked about today was what happened in the utilities. Utilities were down 3.8% today. Home builders were down 4% today too. So it seems like there's still a lot of problems in this market, even though we've retraced a good portion of it. The next thing that I wanted to discuss with you was this move in biotech that's getting very little attention. Now I know some of you have been onto this, but the financial media just continues to not give this much attention. Every time I turn that financial media, they're talking about, oh, this market has been led by the FANG stocks and the FANG stocks plus Microsoft. Well, they've done well, but it's also biotech, software, healthcare names, and a bunch of other groups too. So I wouldn't say that this market has had great market breadth, but it's not just about the FANG stocks. And I hate when people use very simplistic views like that. So what is this chart in XBI telling me, right? XBI, I think, is the most important biotech ETF because it covers all of them, right? It's equally weighted. IBB, don't forget, which a lot of people look at too as well. IBB actually made a new 52-week high today. So this has been far and away the best, the strongest sector, biotech and healthcare over the last month. This has been your relative strength, and this is, believe it or not, made a 52-week high. But I think IBB is market cap weighted, so the larger companies are your biggest weights, right? That's how market cap works, right? The bigger companies dominate the index. The XBI is equally weighted, so the small companies are the same weight as the big ones. So this took out a virgin point of control. That's the upside target. Could it go higher? Yes, it could go higher. But this is not where I would establish a trade, right? This is where you should be taking, in my opinion, I would be taking off trades here. So, I saw a lot today. People really were noticed this biotech name and that biotech name and this biotech. Yes, the whole group has been performing very well. So what happens when that, sometimes takes place is that, if they're all going up, it usually doesn't continue. It's been going like this for a month. So I would be cognizant of that some of these names, I think, have had great momentum to them, but at some point you see a rotation maybe into another area of the market. I'm not saying that has to happen. I'm just saying my upside target has been achieved in the whole sector. So I am still long. I still have a lot of exposure to healthcare names. I'm long 3 different ETFs in our tactical portfolio. I'm along XLV, as in Victor. I'm long PSCH, which is small cap healthcare, and I'm long IHI, which is medical devices. But would I be adding any healthcare or biotech exposure here? I don't know. I think I would like to see a little bit of digestion at this point. But again, it's nice to talk about the market leadership right now. And also with the software names, I'm still seeing like some setups. TTD was one that we covered in the weekend move, but look at what it did today. So I don't like those types of candles when, and as I said in the trading room today too, always, we could look at trades in the beginning of the day, but the close is the most important thing. If you're doing some swing trading, the close in the last hour of the trading day is much more important than the beginning, right? Because that will tell you all the information about how the candle is going to look. Another name that I was looking at, which I did not want to chase today, was Slack, a program that I use a lot. But look, this did not close. I'm going to wait. And I know that means I'll miss the first move here, but this thing has to get over $30 because it's stalled here once, twice, 3, 4. So I know it's okay to establish a small position here, but I'm going to wait because this $30 level for Slack, is on multiple time frames. Is on the 1 hour and is on the not only the 1 hour but on the daily chart too. So I will wait until this happens. We've been seeing a whole bunch of call activity in this name. That to me doesn't really matter to me because again, at the end of the day, I don't know what their position is, and I don't know if they're hedging with stock on the other side of it too. And most of what we're seeing on the tape with Slack, with work, is what I refer to as momentum call buying, meaning it's very, very short term in nature. Now, again, and I never want to hang my hat on that somebody else is doing. Does it get me to look at the stock? It does. But at the end of the day, they're not going to tell me what they know, why they're buying Slack short-term call options. So I rely on my own system, and my own system tells me I'm not going to go long this thing until it gets above $30. So, and I'll have to catch it quick because sometimes this name has momentum to it. Another name that I'm watching is Paycom. But Paycom did not close, right? This is one that I think always gets lost. At least I forget about it. But this is another software play. It looks pretty good, but it needs to make the move above value, which is basically 226.70. So I'll keep this one on my radar. It's one that I could get into. But also notice that that level is coming up on the 1 hour chart too. So you've got resistance on two different time frames. So again, sometimes trading is more about sitting and waiting for the signal than just trading to trade. So I think we'll continue to watch some names going into tomorrow. But for now, I've been playing this market to the long side. And have done a pretty darn good job at it. But at this point, I want to see how this develops over the next day or two, and we'll go from there. Especially like after the run that we've had, and with the country still on lockdown, I don't think it's the best spot to be adding a whole bunch of new risk. Now again, you could day trade and you could add maybe a swing trade here or two, but I definitely don't want to get over the tips of my skis in terms of putting on risk here. All right, guys, that's it for today's recap. Thanks for watching and I appreciate it. Have a great night.